for anyone who worked for WMATA to purchase in DC, getting $20,000 in assistance. So as soon as DHCD made the announcement, I went to social media. It blew up as it normally does. Then DHCD retracted their offer to allow WMATA people to get the $20,000 of assistance. So then I went to the state of Maryland and asked, hey, this just happened. What if you were to offer something very similar in conjunction with my company? We would put in, you would put in, and we could offer something very similar to what DC just took away. And after about 3 minutes of discussion, they said, absolutely. So in cooperation with my company in the state of Maryland, now there is the equivalent to what DC took away in Maryland. Now, move forward, DC is watching all of its constituents walk out the door and go over to Maryland, because now the WMATA people are getting the equivalent of what they took away. They then came back and said, okay, we'll offer it again. So now in DC and in Maryland, there are 2 specific WMATA programs for WMATA employees. And that's what we're going to talk about today, along with a knowledge base of the other 18 different down payment assistance programs that are available in the DMV. It's super, super high level. I cover everything, and there's a lot of it. So if there are questions, obviously call me, or ask now. It's probably easier to ask now, but that's kind of the background behind how WMATA has now made a huge splash onto the real estate market because of what started in DC, took away DC, Maryland picked up and is still available in Maryland, and now back to DC. So all of that to say, let's go. Boop, boop. All right, there is my contact information. I'm sure Jasmine will give you this, but if you want to take a picture with your phone, it'll also be at the end of the presentation. So I'm going to talk about 17 different assistance programs in 30 minutes. Watch me. And they are predominantly in Maryland. Maryland has more programs than actually any other state in the United States. So Maryland is very big on homeownership. It builds better communities, better schools. It's safer. It's just everything about it. And this governor supports it 100 million% and has allocated, even in budget cuts, allocated more money into the housing programs. So you will see Maryland have way more programs than DC, and Virginia only has 1 program. So if you work in, actually 2. If you are in Virginia and you want the assistance, they're not even part of this presentation because there's only 2. So the other thing to know, which is a specialty of a loan officer, is that you are able to stack multiple programs on top of each other. So in DC, I'm continually stacking HPAP with other programs. So most of my folks are getting about $200,000 in assistance in DC. It takes someone who makes $60,000 a year and benefit to you guys. They're able to purchase a $500,000 house. So in DC, using these programs, the lender doesn't. That's why not too many lenders do it, because if we're paid off the loan amount, you're paid off the sales price. So after you start stacking all this money, the loan amounts are nil, and the programs are very, very, very difficult. That is the main reason why you do not see a lot of loan officers doing down payment assistance. We just don't make as much money. But that's not why I do it. I have been doing this for 30 years, 32, 30 in down payment. I do it for a completely different reason. And it's just purposeful to me. It is something that I am passionate about. So what I will do is show you the programs that are my stacking programs that we utilize all the time, and the ones that are super, super popular. And we'll go one at a time. And then because you guys are real estate agents, I'm going to tell you the hurdles that you will have when utilizing some of these programs. And probably the largest hurdle you will have when utilizing Pathway to Purchase, which is a program up to $50,000 in PG County, the largest hurdle from a buyer's perspective is that there is a special inspection called an HQS inspection. So it's like the normal inspection on crack. There are 72 items and it's pass, fail. There's no in between. If it fails, the seller must fix whatever's on the fail. There's no negotiation. So normally in a normal inspection, if something's broken, it becomes a negotiation between the buyer and the seller. Maybe we'll fix this, maybe we'll give you a credit. In this case, you cannot give credits. It actually has to be fixed. So from your vantage, when you're going to present this offer to the listing side, I always disclose the HQS because if you don't, it could cause problems later down the road when it's conducted. But a lot of my agents don't. So I would say Jasmine would tell you to make sure that they are aware. Jasmine, I don't know. I don't want to speak on your behalf. Would you say that? Jasmine,
Absolutely.
you would say to disclose that, right? It's an HQS inspection. You don't have to drill it down. You could be very high level and just say, yes, we're going to conduct inspections. It's an HQS inspection. Listing agent either knows or doesn't know. That's number one. That's probably the worst thing about the program. Number two, it takes 60 days to close these. Normal down payment assistance for me, I can't speak to other lenders, 21 days start to finish, except for FHLB, which is about 45 days. But this program, 60 days to close. So those are two things sellers don't like: extended close dates and inspection issues. So if you can get past that hurdle, it's actually a good program for the borrower because there's no credit score requirement. So if someone has a 580 credit score, they can get up to $50,000 in assistance. So, and because it's so much money, you can write the offers and not ask the seller for any help, no seller help. So it's kind of like, you take my HQS inspection, I'm not going to ask for 3% in closing help. So it has had money for probably 8 years. It was at $25,000 until a few months ago. They upped the ante to $50,000 because they couldn't get the program through because we've been in a seller's market. We're now luckily in a buyer's market. I don't know how long we will be here. My guess is not very long. But if we are in this little window period, this is where this program works. $50,000, 580 credit score, a couple bumps for the seller, HQS inspection, and 60-day settlement. But good program outside of that. All of these programs will have income restrictions. These are pretty generous. So if there's one person in the household, they make $91,800 and less, they qualify for the program. If they make $92,000, they do not qualify for the program. That's more my job to do, not your job to do, but I like to make you guys as we stay in our lanes. I don't become an agent and you don't become a loan officer, but high level, it's good to know or convey that, hey, the lender is going to reach out to you. If they start to ask you about the programs, just defer. I'm not licensed to talk about those programs. I can tell you they're really good for people purchasing a home. Let's connect you with the lender. All right, so this is the state of Maryland's one of 5 programs. This one is designed for low income earners. And if you look at $81,000, that's actually considered a low to moderate income earner by the standards of census. So everything is done by a census. The closer we get to the city, the higher the income limits, the higher the sales price limits, everything gets higher the closer you get to the city. The further away you get to the city, everything is a little bit less. So if you look, it's income limits in Prince George's, Prince George's, Charles County, Montgomery County, Frederick, $81,000. But if you look at Anne Arundel, Howard, and Baltimore, $65,000. Significantly lower because it's in a different census. So what you will find for every program is if it's in Anne Arundel, Howard, Baltimore County, Baltimore City, the income limits are significantly lower. So it's harder to use those programs up in those areas, just a little FYI. But this one is 6%. So it covers the entire down payment and half the closing cost. So you either stack it with another program or you ask the seller for 1.5 in closing assistance and someone's buying a house with no money. And that's the key component with a 640 credit score. How much money do they need to purchase? They need a 1% earnest money deposit. Across the board, I don't care what income limit whatever your sales price, it's a 1% EMD. And that's what we tell them from the beginning. Most of my clients don't have that saved, but we tell them from the beginning, you need 1% to write the offer, so start saving. And then it's my job and your job collectively to try to get the seller to crack open and give us some money. But this one covers the entire down payment, half the closing cost. So you really don't need much from the seller, but it is for lower income limits. Now, this is the WMATA program. So the WMATA program is working with the state of Maryland's 5% loan. And our company is coming in with a backdoor 1% for the state of Maryland. So it looks like the 5%, it acts like the 5%, but it isn't when it sells to US Bank. So it's 5% of the loan amount, not the sales price. So if it's $300,000 loan amount, you're getting 3 times $18,000 in assistance, plus anything else that they may qualify for. Now, people ask this question, can you stack this program with the PG County program, Pathway to Purchase? The answer is no, not this program. There's another program through the state of Maryland called the Directive, which is just an interest rate, no assistance. That's the one that you can stack with Pathway. So your loan officer has to know all of these little nuances to stack all of these different programs. And the name of the game for me is try to keep as much money in the buyer's pocket as possible. I tell everyone, if you're a first-time home buyer, use somebody else's money to buy your house, because then that creates a move-up opportunity. Typically within 1 year, 1.5, maybe 2 years, they're selling and moving up. They can't use a program again. Well, they can through the state of Maryland Flex, but they would typically take their equity and purchase another property after they pay everybody back. But this, look at the income limits, extremely generous, almost $200,000 in Charles County, Montgomery County, Prince George's County, $196,680 for 1 and 2 people in the household, and 3 to 4 people, $229,460. So very, 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 very generous, which is good because most WMATA bus drivers, train operators, and mechanics make about $150,000 to $180,000. So these expanded income limits allow the WMATA people specifically to purchase utilizing this program. So they've made a lot of accommodations, 640 credit score being the other one. So this program is also a 640 credit score. So this is the WMATA program in a little nutshell. It's either 5, 4, or 3% loan amount. Typically, I'm doing the 5% because most of my WMATA people are using FHA, which is 3.5% down. So 3.5 from the 5 gives me 1.5, 4.5, 5, 1.5 left over for closing cost. And if you get the seller to pay 3%, your WMATA person just bought a house with no money. So in combination of this program and the seller, this is where you see on my social media, all my WMATA people buying houses with $500, $600. So I'm posting today $625,000 sales price. They bought the house for $300. So it's in just demonstrating that this can be done over and over and over and over and over again. And that's why what the WMATA base, both DC and Maryland, is on fire right now. I would say 90% of my business right now is WMATA. Big, big change from probably just 6 months ago. I had WMATA people, but not at the concentration level I have right now. Now, WMATA anybody can purchase this, whether they're WMATA, not WMATA. In Greenbelt, there is a program that's a $15,000 completely forgivable grant through the state of Maryland in cooperation with the city of Greenbelt. So if they live in Greenbelt, they want to stay in Greenbelt, there is a it's like someone handing them $15,000 to buy a house. Here's your cash. You don't have to pay us back. Just use it for whatever you want. Down payment, closing cost. Again, just a 640 credit score. So 640 credit score, 15,000 completely forgivable. They just have to live and want to stay in Greenbelt. WMATA, not WMATA. HomeAbility, so they just made the announcement yesterday. This is just ran out of money, but they do replenish this one quite often. This is kind of like FHLB, another grant I'll talk about. They get money, it runs out. They get money, it runs out. And it's because it's a significant amount of money, $45,000 in assistance to purchase anywhere in Maryland. And the component behind the HomeAbility is specifically designed for someone who has a disability or cares for somebody who has a disability. And I can use my son as an example. My son has special needs. He's 23. I'm his guardian. He's my roommate for life. If I was a first-time home buyer and I wanted to buy a house and get this $45,000 in assistance, my son lives with me. So for me to qualify, because I do not have a disability, but he does, all I have to do is have a little form filled out that says, this is my son, he has a disability, send it off to State of Maryland. They confirm the disability, usually by Social Security disability income, and then voila, I would get $45,000 to purchase a house. So the HomeAbility program is an amazing program. It does require a higher credit score. So everything previously was 640. This is 720. So there's only 2 programs through the state of Maryland that require a 720 credit score. It's this one, the HomeAbility, again, designed for anyone who has a disability or caring for somebody who has a disability. And the other program is this one, Smart Buy. State of Maryland has a program that will pay off student loan debt and give money for down payment, both. So pay off $20,000 in student loan debt and give that purchaser either 6% of that loan amount as assistance or $6,000, depending on how much money they make. But this pays the student loan debt off entirely. So if we closed this month, next month, it would not be on their credit report. So it has to pay their student loan debt off entirely. So if they had $30,000 in student loan debt, they would need to bring $10,000 into settlement to pay the difference between the 20 and the 30. And again, this one is a 720 credit score, just like the HomeAbility. But same expanded income limits. Everything about it is the same. It just happens to pay off $20,000 in student loan debt. So where in the planet do you have an assistance program that pays your student loan debt and gives you money for down payment? The state of Maryland has done a very, very, very good job at honing in on who their constituents are and what their needs are. And that's why you see so many of these programs very curtailed, very special to the constituents in Maryland. So we'll buzz into DC right now. DC has the most, well, not anymore. It was the largest down payment assistance amount by like 206,000, but now California came out with one that's $269,000. So it's the second largest in the nation. And of course it would be California because their real estate is twice as bad as ours. So it's $206,000 total, 202 for, and I'm going to show you a grid in a moment because it's tiered out by how much money the person makes. Very minimal requirements. DC resident, 630 credit score, $500 in your bank account, 2 months in a row. That's it to qualify for the program. There is a process to get approved. That process used to be horrific and arduous and long. And finally, this year, the DHCD got it together. And it is a very streamlined process. We are 4 months into them actually opening, and they still have money. That has not been like that for the past 4 years. Normally, they're out of money in 2 months. And they have $19 million still, which is probably going to take us into September. So they are still issuing notices to proceed. They are still, and these funds are now guaranteed. So when the borrower gets what's called an NTP, notice to proceed, those funds are guaranteed until August. So there's no more running out of money under contract, none of that stuff. So they've really, really, really done a good job with this program. That just breaks down who pays people back. So here's the actual grid as to who gets what. So if it's just me and my household and I make $90,000, I'm going to fall right here in this little grid. I make more than 78, but less than 91,000. If you fall in the middle, you default to the one below. So if someone was one person in the household, they made $90,000, they'd get a total of $105,000 in assistance, 101 for down payment and 4,000 for closing costs. So all of the programs come with, this is your down payment plus 4,000. So if you're using other programs in DC that cover the closing costs, like tax abatement, then you can actually use that $4,000 for down payment for a total of whatever, this plus 4,000. So the income tables are based on how many people are in the household and how much money they make. My typical buyer in DC is a single female with 2 children. That would be about 75% of my purchasers in DC, and they fall right in this income grid right here. They get about $165,000 in assistance. So they get quite a bit of money in DC. And like I said, they still have money. This money is still available. So if people come to me, they live in the district and they want to purchase and they have not gone through the HPAP process because of frustration from previous years, we tell them this is how you do it. And instead of taking 6 months, it takes 6 weeks. And the fact that they still have money is everything, because now that they added WMATA into their district employee piggy bank, I would expect that the EHAP money is going to run out before the HPAP money does. So none of these buckets of money in DC are perpetual. They will run out. It's just a matter of when will they run out. And DHCD does not let us know. So it is brakes on, we're out of money, nobody gets NTPs. But that's better than going under contract, thinking you're getting money, and then they say, no, we're out of money. So baby steps, right? They did a lot better this year than they have in the previous 4 years. But that's the income table for HPAP. Now, this is the program that DHCD gave, took away, and gave again. So it's for WMATA employees plus DC district employees. So, and if they own real estate in another state, not in DC, in another state, they can own real estate and use this money to purchase in DC. It is the only assistance program in the DMV that allows you to own real estate and still get assistance. No other program does. So if someone owns a house, they're not getting any type of assistance. But this program allows someone who may live in Maryland and own a home in Maryland and work for the district or WMATA to purchase a home in DC. And I have one right now where my WMATA employee inherited a home, she and her sister, from her mother. They're living in this home, which would make her not eligible for any program. She works for WMATA. She wants to move into the city. So she's able to get $20,000 in assistance to purchase in the city. So she's in her route right now to get her notice of eligibility for getting that money. So it's the only program, but if they own somewhere else, not if she owned in DC, she wouldn't get any money. But if they're in another state, they can. The beautiful thing about this is there's no income caps. So they could make, I have done loans for super high level executives in the mayor's office that are near 6 figures, well past 6 figures, and they get $20,000 in assistance. So there is no income limit. Doesn't matter if you make $900,000 a year or $60,000 a year. You're getting 20 grand. And if you are a first responder, fire, police, teachers, EMT, you get an extra $10,000. So if you're a first responder, you get 30. If you're a regular district employee, you get 20. So first responders get an extra 10, but to get that money, they have to sign on for an additional 5 years of employment with DC government. So if most do, I haven't had anybody not do it, but if they were nearing, this is the only example I could think is if they were nearing retirement, then they knew it was in that 5-year period, then they might not get this extra $10,000 because they won't be employed for 5 years. So there is, if say that happens, they take the money and they're forced into retirement, they would have to pay back a portion of the money. So DC is very fair about it. Sometimes if you're forced into doing things like this beautiful government firing of everybody, and the district's not going to do that, but they get funding from the federal government. So there were some layoffs that were unexpected. So if you had signed on for 5 years and got laid off, that's not your fault. So you would not have to pay back that money. But if you voluntarily quit, then you would. So 30,000 for first responders, 20,000 for everybody else. Now, one of the things I love that no other program has as it relates to first responders and teachers is that the paraprofessionals, which typically do not have degrees, they have certifications. They are eligible for the $30,000. So this is very, very, very good for the paraprofessionals. I have 3 of them right now because they did not know that they could purchase. Typically, it's teachers, educators, and DC did a very good job by including paraprofessionals because they are educating. They just don't have the credential, the degree that says they are, but they have every certification that says that they know what they're doing with children. So this is a great ad, the paraprofessionals as first responders for the EHAP program. DC Open Doors is very common. It's been around forever. The only bad thing about DC Open Doors is the interest rate. So they set their own interest rates and we can't use any other rate but theirs. So if they didn't qualify for HPAP, they didn't qualify for EHAP, this would be the only other assistance program that they would qualify for if their income was below 275, 400, and they had a 640 credit score. It just covers the down payment. So the down payment gets covered. If you can get seller help, there's no cap on how much assistance you can get. You get 6, 10, 20% assistance. You're not going to need it all, but it covers the seller assistance can cover the closing cost only, but it covers the entire down payment. And it's been around for a very, very, very long time. Now, like I said, the only bad thing is the interest rate is above market. But I have one right now where they stacked FHLB and this one. And the reason why they use this program is because, believe it or not, their interest rate, so the rate's 6.75 using DC Open Doors, and they were going to do FHA financing. The interest rate was 6.125. So you would think just in that by itself that the 6.125 would have a significantly lower interest rate. But because this was on FHA and it has mortgage insurance, if they used FHLB and DC Open Doors and stack them, they could go on conventional financing where there is no mortgage insurance. So even though the rate's 6.75 on the DC Open Doors and 6.125 not using it, the payment is $27 lower on the conventional financing because of the mortgage insurance. So a lot of people focus on the interest rate instead of focusing on the actual numbers themselves. So, I mean, there's plenty of benefits to it. The higher interest rate is the better tax write-off. They're buying them, like there's so many more benefits to stacking this program than not that all I do is present it and then they marinate and then they pick what they want. Do they have to do it? No, but it didn't make sense not to do it. So there are times where I stack this a lot with FHLB. I am the only lender that can offer HIP. HIP is a $20,000 assistance in Ward 7 and 8. So it's new construction Ward 7 and 8 for the builders participating in the program. It's $20,000. It's forgiven after 5 years. No minimum credit score requirement. So the only big requirement is the household income cannot exceed $279,000. So there's only one community right now, the Anna Townhomes. There are, I think, 6 units left. And those townhomes are gorgeous, 3-bedroom, 3.5-bath with a garage right across from the Anacostia Metro. And they're in the fives, mid-fives. So beautifully priced. And you get this $20,000 to utilize however you want to utilize it. Down payment, closing costs, whatever you want. So HIP, like I said, I'm the only lender because it's got some little nuances to it that most lenders don't want to get their feet wet in, but my company doesn't care. So it's a good one, 20,000 forgivable. Now, FHLB, I'm sure you heard of, my most popular program. So it says funds available. Funds ran out 3 weeks ago. It opened in February. It ran out into March. That's how popular the program is. So just like that, they got it, it's gone. It'll come back. Usually June, we get more money, then it runs out, we get it again in August, then it runs out, we get it in December. It is a first come, first serve. And the only way that I definitely utilize this is right when it opens, I have all my people ready to go. They're under contract and they are going to snatch up that money straight away. But because it comes and goes and comes and goes and comes and goes, my clients usually get to utilize this because I watch it like a hawk because no credit score requirement. So think about DC. I have HIP and I have this that don't have a credit score requirement. $40,000 with no credit score requirement. So it does make it significantly easier to purchase for folks who might have a lower credit score below 640 if they start stacking programs. But it just ran out of money. It'll get more. But what I like about it is for our community people, again, it goes back to our community service. It's $20,000. For everybody else that's a first-time home buyer, it's $17,500. And then they have this new high income earner. And this is why I think they ran out of money so quick. They have this new high income earner, which is up to about $149,000 of income. And they don't have to be a first-time home buyer. They just can't own real estate. And they get $15,000. So a new ad that they added that wasn't there before, I think, like I said, why they ran out of money so damn quick. Higher income earner, no credit score, no debt to income, and you get $15,000. So FHLB, hands down, my best assistance program, but they need to put more money in the pot because they run out of money too quick. Now, this is an actual local nonprofit here in DC. So this is a true. I love this nonprofit called Birdseed. So Birdseed gives in the BIPOC community only $20,000 in assistance. So the requirements are very, very simple. BIPOC, household income less than $150,000. And that's it. You have to live in the DMV for 3 years. So somewhere in the DMV for 3 years, Maryland, DC, Virginia for 3 years. And it's a very simple process to apply. So they offer the grant 2 times a year, this month, April, and again in October. So in February, they open up the application process. So anybody who wants to be eligible for this $20,000, you apply from like February until the 31st of last month. And on my social media, I'm always reminding people, get in there, get your money, apply. So my social media is my largest communication platform because I can cover a lot of people in one post. And usually because this one is very popular, 150,000 BIPOC, no credit score requirement, and it's completely forgivable. So again, like someone handing the buyer $20,000. And October, so they're closed. So right now what they're doing is everybody that applied the previous from February till now, they're reading applications and it goes before board. The board does a review. Everybody says, we're going to pick these 50 people. Then they call the 50 people. Are you still interested? Have you bought a house yet? If they already bought a house, then they're not eligible. So they call everybody, and then everybody comes in and they do a little face-to-face interview, make sure everybody's BIPOC, make sure that they meet the requirements, bring your pay stubs in, and then they get the $20,000. But it's a true nonprofit. So they pull in April and they pull again in October. So usually in August, they open up the application again. And that's where you'll see on my social media, I'm reminding everybody it's time, go fill out your application. And if you didn't get picked in the previous one, you just keep applying. But once you own a home, you're not eligible anymore. Baltimore City, lots of money. I don't know how this one got way down here. I wanted to talk about this in Maryland, but this is where all my millennials are flocking right now. They have all flown the coop. They're up in Baltimore City. It is because the immense amount of assistance that they can get in Baltimore City. Up to $65,000 in assistance between 5 programs. Now, the only thing, remember I told you, the downside about being up in those areas is the income limits are lower. Look at the income restrictions. So one person is $72,950. So if they made $75,000, they wouldn't qualify for any of those programs except the vacant to value, because these are properties. So if you buy this house, you get $10,000. There's no income restrictions. There's nothing. So the vacant to value and the roots to roof, those 2 programs, there's no income restrictions. So you can buy a house, a particular house that participated in a program and get $10,000 with no income restrictions. But the name of the game up there is, number one, your loan officer needs to be on it, because there's so many programs that they cross-pollinate, but some have debt to income restrictions, some don't. Some have money, some don't. So how I structure my Baltimore people, number one, always calling to find out if there's money available, because they run out of money quickly also. And then the person's household income. And then I go backwards from there. But this is a really fun one. They have a trolley tour where you literally get in the Baltimore trolley. They take you in the trolley through all the redevelopment areas. This is a vacant to value area. This is a roots to roof area. They go through all the areas. They come back. You get a little badge and there's a little number on it. You register that little number, and then usually within 3 weeks later, they do a lottery pull. And if your number gets picked, you get $5,000 cash to do whatever you want to do with it. Closing costs, down payment, doesn't matter. So that's actually a really fun one. So as an agent, right, something you can do different than most is have a trolley trip. Any first-time home buyers who want to buy in Baltimore, let's go get on the trolley and let's learn about all the different programs. And it's free, doesn't cost money. So you can just do something different. Get a bunch of people, hop on the trolley, learn about the areas. If I'm a real estate agent and I'm new or trying to niche myself, trying to separate myself from everybody else, doing something like that is a really good idea, because you get to touch and feel that customer. They're right there at your fingertips. And you can use your social media platform to haul them in. Like, here we go, haul in your social media people just by saying, hey, let's go get on a trolley. It's free. It's up $5,000. So there's just different things that you can do with these programs that can build a niche for yourself, kind of not make you like everybody else, because there's a lot of you out there, and I don't want to talk about these. It's Montgomery County. There's a lot of you out there, and separating yourself is very hard to do. So there are programs. I'm not going to talk about them because I could be here forever on these programs. In Montgomery County, they have properties that you can purchase if the buyer falls within those income restrictions that are significantly below market. So on my social media, I posted about a month ago some Bethesda townhomes that are $1.5 million townhomes came into the MPDU program. 12 of them did. And they're $1.2 million townhomes that participate. 12 of them went into this program where the borrower paid $236,000 for them. So they get a $1.2 million townhouse for $236,000. So it's pretty cool, this program in Montgomery County. Their IZ program in DC, there's a bunch of them, but I could talk for another hour on all of the reduced real estate. Now, bad for you guys, you don't get paid on the 1.5 million, you get paid on the 236. So bad for you guys, bad for me, but very good to drive in, again, social media awareness that it's there, that it's available. And then there's a program in DC called tax abatement, where the borrower doesn't pay property taxes for 5 years. It's done by income, and then that's it. So I went over by 15 minutes. I'm so sorry, Jasmine. But it's taking a lot of information and squeezing it all into one. It is a lot of information, but the nuts and bolts behind it is the programs are available to help a person purchase a home with very little money. And that's the name of the game for a lot of folks who want to purchase. It's hard to save, especially where we are right now with this inflation. It's even more hard to save. So if they can scurry up that 1% earnest money, and we can help them do that by putting their budget together a little bit better, stop buying Klarna and put that money towards your 1%. And I'm the one that gets to have those really hard conversations, not you guys. I'm always bad cop. So you guys are good cop, I'm bad cop. At the end of this, they have a house keys and they didn't pay any money, but unanimously they will say, Mama Alex rode me like Seabiscuit to make sure I kept my credit straight and got that 1%, because that's the hardest thing for them to do. Everything else is pretty simple. Documents are documents. Saving and getting to that 640, now that's a challenge. But that's where, as Jasmine was saying, this is my wheelhouse. We build a pipeline for you guys of people with bumpy credit. We send them to my credit guy. I don't know if you have a credit guy, Jasmine, but we send them to my credit guy. The credit guy then fixes their credit and sends them right back to us. They're logged to us forever. And the way our system works is if a person takes application and you're their person, you're registered as their partner forever. So if they upload a document, you're aware. If they go to credit, you're aware. If they come back and they're done with credit, you're aware. You get notifications, same notifications we get, you get. Now that could get very annoying. Ask James Archie, one of my top agents, if you have multiple people, because you're getting ping, 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 ping all day long, but it keeps him aware and cognizant of, if I've just issued an approval letter and he's out showing property, he gets notified. Then he knows, go look at your email. So a lot of times I'll do joint, text together, you, the buyer, they find a house, they want the numbers. We put it together. I run the numbers, send it via email. So I'm huge on communication, because buyers can be very flighty and we like to lock them in. They Velcro to you. The name of the game is to keep them Velcroed, because we don't want them walking into new construction after you've been showing them houses and then all of a sudden they're not with you. They go buy new construction and you're screwed. So we Velcro them to you. That's how we kind of keep them locked into you guys. It's a little bit different. It's a system that works very, very well. And can be annoying if you have multiple buyers, but I think I'd rather be annoyed on being informed than not being informed at all. So